welcome back to the Corporate Finance Academy. Today we are going to talk about CFO salaries. All right, CFO salaries. So we are going to talk about a quick overview, just kind of reground on compensation for CFOs and how that works. Then we'll talk about public companies, so publicly traded companies. We'll talk about private equity in private companies, and then we'll wrap things up with some different details. So let's reground first. So we went through this. If you haven't already, we had a video on salaries within FP&A and corporate finance. You should check that out. And we covered basically steps 1 through 4 here. And today we're going to talk about the 5th tier. And these are just kind of basic tiers. It differs company to company, but this is kind of how you can think of the rough landscape of finance, corporate finance hierarchy. So how does CFO compensation break down? So the first piece you'll often have is a signing bonus. So this could be in the form of cash, equity, or some combination. And typically this is going to be pretty heavy on equity. And this is going to have some vesting component, often time-based. This puts the CFO's interest in line with the company's success. So they try to have the CFO hold a large amount of equity of the company. And that makes the CFO want the company to do well and have the share price go up or have the company value go up. It's a private company. Often what's also going on here is you're compensating someone for what they're leaving behind. So a CFO that goes and takes a new job, they're leaving a job where they probably have some unvested equity options, things that are worth money, but they haven't vested time yet. So this is part of the new company making them whole for what they're leaving behind. Then you have base salary. This is straightforward. This is just cash-based compensation. This is their salary. And interestingly, when you get to this level, the base salary is often the smallest piece of the CFO's compensation. Next is the cash bonus. So the cash bonus is usually based on the company's performance. It's typically going to be calculated off a percentage of your base salary. So if you make $500,000 a year and you have a 100% bonus target, that means that your bonus target is $500,000, 100% of your base salary. And lastly, you're going to have equity or LTIP, long-term incentive program. And this is equity, which is typically given based on how the company performs. You get more or less equity given to you. This vests over some period of time. And in the private equity world, this could even fully vest at any change in control or deal that happens for your company. And in the CFO world and in most executive officer C-suite roles, this equity LTIP is the largest piece of compensation. Okay, so there's a bunch of different factors for salaries. Again, we talked about this in the other salary video, so we won't belabor this too much. We'll just go through them real quick. How much you make is going to depend on your job title. So in this case, we're generally talking about CFOs, but you could get into the senior vice president or head of FP&A for a very large company. But based on your title, it changes. Is it a public company? Is it private equity, family owned? What type of ownership? How many years of experience do you have? Are you inexperienced and you're taking a first job as a CFO at a very small private company? Your compensation isn't going to be near as big if you've got 25, 30 years of experience. Industry. So what industry is your company in? Manufacturing, SaaS-based companies, financial services. This will depend on what your compensation looks like. In company size. I mentioned it before about Apple or Google, but smaller companies typically are going to pay less than large companies as a general rule of thumb. We'll get into some of those details. And then lastly, location. Even at these high CFO levels, you will see cost of living impact the compensation packages. Okay, so let's get into the CFO salaries now. So the big dogs here, these are the large public companies, the S&P 500, and that's actually what we're going to look at the data for the S&P 500, but these are big public companies, and they're the big compensation packages. So if you look here, and I extrapolated the data a little bit, you can see in the notes, and frankly, this is probably a little bit conservative. I assumed only a 5% increase from 19, but you'll see later, there's data that shows that those numbers are actually more like 15% in 2021. So these numbers are probably actually well over $6 million, but this is just the average total compensation for CFOs. You can see my extrapolation puts 2022 right at $6 million a year. And again, this is for the S&P 500. And this is all publicly available information if you look at company filings, proxy statements. And then the CFO compensation components here is really interesting, right? So if you look at 2021, 20% of their compensation is base salary, 20% is bonus, and 60% is LTIP. So you've got LTIP, that's 3 times your base salary. And this would also, you could extrapolate to say your bonus is roughly 100% of your base salary as a typical target. But this just shows you how important that equity piece is and how companies are driving more and more to have compensation tied to the performance of the stock of the company. So the CFO has that as his goal and he's aligned. Now let's look at slightly smaller public companies. So the data we're going to look at is actually from the Russell 2000. So see that these are some of the smaller public companies. In fact, some of these will be smaller than the large private equity companies. When you get into micro cap stocks, you can get publicly traded companies that have revenues as low as just a few $1 million a year. So this has a great deal of variation in it. If you look at, this has a lot of numbers on it, but let's just look in the mid-size here. So if you look at the mid-size, the base salary is $360,000. The total cash is $536,000, and your total compensation in total is $1.2 million. So you have a $1.2 million in the average total comp package. Now, this is probably at least 20% higher today. So there's some data out there that shows that there was 4% raise in 19, 4 in 20, 17, 21. It's probably about 30% higher than that. So when you start to, when you're at $1.2 million, a 30% increase is significant, right? That takes that number from 1.2 up to about $1.6 million a year in total compensation. So you can see quite a bit smaller than the really large public companies, but still a big number. And if you get into these high end, right, if you look at the highest end here, $3 million compensation in the Russell 2000 is the average at the 90th percentile. And again, that's on the low side. So if you bump that up 30%, that's actually going to be closer to $4 million a year. So you're talking about some serious numbers, but when you get into those really small companies, you can see the base salary is probably in the high 200s to low 300s at the low end, with the total compensation package probably just over $400,000 at this point in time. So still very rich compensation packages and big numbers going out to these small, quote unquote, small public companies. Now let's talk private equity CFO compensation. So this is coming from a study that was done by Heidrick and Struggles, which is, they put out a private equity CFO survey. So the base salary median is $313,000. Now you got to remember, and we'll get into some of these splits, but in the private equity world, again, you've got small companies and you've got very large companies. You can see at the higher end, you've got a $513,000 base salary, but the median is $276,000. Now the average bonus is about $150,000. So the 95th percentile, that was almost $500,000. So when you're looking at that 95th, you've got 513 base, 500,000 bonus, you're over $1 million of cash comp in that 95th percentile. And the bonus for private equity CFOs is actually the smallest piece of the compensation. And then the equity side. So this is annual equity as was defined by the survey. And this is, again, the largest portion of compensation, just like it was for the public CFOs. And your median here is just under 1.5 million. And again, these are for companies based in the US, but you could expect generally comparative numbers elsewhere in the world. And then the sign-on. So this averaged $5 million, which is a big number. And this can take many different forms. And sometimes this has very strict vesting requirements. And the other thing to keep in mind is this often has no value until there is some sort of deal done. So a change of control, the company is sold. A CFO, even after they leave the company and they have vested, they still have to sit and wait for something to happen to that company to be bought or sold before they get that money. Okay, so getting into the details of private equity a little bit, because these are probably the jobs that most people who would watch this video would end up in before they would end up in a public CFO job. But there's a lot of potential to go get a private equity CFO job. What this does is this shows you by industry and by company size what those base salaries look like. And you can see if you look over at the right, you've got $50 million or less company, the base salary is $238 with a bonus of $125, but when you skip down to $1 billion, it's about $500,000 and $400,000 bonus. So you're getting close to $1 million of cash comp at $1 billion company, whereas at the smaller company, you're still under $400,000. So you're more than double when you get to the $1 billion company. And you can also get a cross section on the left here, how it compares across industries, with the tech industry clearly being the front runner for base salary, but some of that probably has to do with cost of living as well, because those are often located in high cost of living areas. So now let's look at the equity piece of it. So this is by industry here, and this is by company size, and this is annual, and this is your sign-on. So these are actually points, percentages, and then these are the dollar figures. So you can see leading the way actually is the consumer-based businesses with a bonus of $2.7 million. And next up is tech at 2.2. And you can see how a services business is significantly lower than some of those others. And the sign-on kind of follows suit, right? With tech being an $8 million sign-on versus you get down to industrial or business services, 2.7. And then by company size, again, the bigger the company, the bigger the bonus. So it's funny because these are percentages. So 0.6 of a point is worth $8 million at a big company, whereas a whole point at a $50 million company is only worth $400,000. And then you can see how the sign-on varies by company size as well. And then just a few final compensation points. There are some other big finance jobs, especially when you get into very large companies, that can have very rich compensation packages, just as good as CFOs at some of these smaller companies. If you look at for instance, the FP&A leader or a segment or divisional CFO role, these are often successors to CFOs, but you can have $2, $3, $4 million comp packages in some of these jobs without actually being the overall CFO. So those senior vice president type roles or divisional CFOs, those can be highly compensated as well. And then as mentioned at the beginning, you always have to think about years of experience, industry, ownership, and many other factors. One other comment, public companies often have a requirements for the amount of equity that the CFO owns. And it's often something like 3 times annual base salary that they get. So if the CFO gets a base salary of $500,000, they're required to keep $1.5 million of equity in the company. And in private company compensation, as I mentioned earlier, is very tightly linked with a successful sale of the business, taking it public, being acquired by another private equity company. That can expedite equity vesting, and it's also often the only way to make liquid your shares in that private company. So that's it. That's all we have for today. We'll talk about in some other videos about how to best navigate salary, how to improve your salary, how to negotiate salary. So we'll have some of those videos to come. But thanks for watching, and be sure to subscribe and like the video. And if you have any questions, drop them in the comments.